Namaskar. You're watching the Mutual Fund Show special edition. We're focusing on what to do with your small cap funds. The numbers on where you can reach us if you have a query are going to flash on your screen in just a bit. And in this segment, we're going to get our top experts to answer your questions. And, at this point, we're getting a lot of questions, which I'm sure many viewers will have. So let me introduce first Hemant Rustagi, CEO of Wise Invest, and Harshvardhan Roongta, CFP of Roongta Securities. Welcome to both of you, and thank you so much for speaking with us today. I'm going to jump right in and start with a query, because what better way to address people's concerns. Vikas has written to us. He's aged 49, and his goal, I really love this goal, is booking profits. Very clear. He's saying, I've been investing through SIP in 3 different small cap mutual fund schemes for the past 5 years. I would like to continue the SIPs for another 5 years. I've booked some profits in 2021 and 23, and I'm still sitting at a profit of approximately 100% in all these schemes. Good for you, Vikas. Now, my question is, should I book partial profit? If yes, where to reinvest? Or should I continue my SIPs? These are the SIPs I've currently invested in. He's given those names. So HDFC Flexi Cap Fund has about 12,500 in it. HDFC Small Cap Fund 3,000. ICICI Pru Balance Fund 12.5. ICICI Pru Multi-Asset Fund 5K, and SBI Small Cap Fund 5K. So quite a bit of detail over there. Hemant, I'm going to start with you because I find this particular query very interesting. People who are sitting on the kind of profits that Vikas is after already booking are wondering that if even the SEBI chair is talking about fraud, everyone's talking about greed, overvaluation, is it time for me also to take something off the table? If I do, where do I put it?
Well, Tamanna, I think that's an important point, clearly. I mean, we have discussed that, and we all know that, yes, I mean, there are certain pockets of small cap. Definitely, there is overvaluation, so there are obviously concern there. But I think from the investor's point of view, the most important aspect is, one, what is your exposure level to small cap and the manner in which you have been investing to it. So if there is someone who has been investing over the last few years through SIP and still has a time horizon of 5-6 years or even more, and wants to continue investing through SIP, and I would say the allocation to small cap, in fact, if I can combine even mid cap and small cap, is lower than what the exposure one has in the large cap. I don't think investors need to really think of booking profit, because there are always going to be phases, Tamanna, where you will see a certain segment of the market. If you go back, let's say 2 years back, only the large caps were doing well, only a few stocks were doing well, the market berth was very narrow. The returns were not great from mid cap and small cap. So I think you wait out those periods, you continue a process. So you will see certain time period where a certain segment will do very well. I think the most important thing is to manage your risk as long as it is within your defined risk level. What I mean by that is that you're not investing aggressively into small cap, and you are having a very clearly defined time horizon, which still, like I said, is around 5-6 years or more, and you're investing through SIP. I am not someone who would recommend that every now and then you book profit, because then it all amounts to timing it. Second thing is, let's not forget, Tamanna, that you have given your money to the fund manager to manage it. If you see, many of these small cap funds have increased their allocation to both in cash as well as the large caps. Some of them are even as much as 20% in large cap and in cash. So I think the fund manager is doing that on your behalf. You don't have to necessarily do that in your portfolio.
I'm going to just take that question quickly to Harsh as well. The goal is booking profits because that's coming from a place of nervousness. And while you want to trust your fund manager, you don't want to keep your eyes shut and, hope for the best. What would you suggest?
So, well, Tamanna, while talking about the conceptually on the financial planning part, I concur completely with what Hemant has said. However, if you take Vikas's query specifically, so he's mentioned 2 things which are noteworthy. The first one being that his goal is profit booking. So he is essentially investing with the purpose of exiting and booking certain profits. The second part being that he's already undertaken this exercise once in the past, where he said that he booked some profits earlier. And again, he's looking to do that same exercise. So fundamentally, what Hemant is saying is perfectly correct. However, specifically into this case, I think there is merit if he's looking at profit booking at his goal and wanting to invest into another category. Well, he could book profits into his small cap fund and reinvestment. What was the next question was that if he was to reinvest, where should he? I think HDFC FlexiCap is already in his portfolio, so he can most certainly increase the allocation to HDFC FlexiCap fund. So yes, answering the question, he can book profit in possibly he has an HDFC small cap and an ICICI small cap. So any one of the schemes he could possibly stop investing into and redirect that money into the HDFC FlexiCap.
Okay, fair point. Gentlemen, hi, Alex joining in as well. We've got another question, and I think this lays the context and the foundation for another aspect that we need to talk about. Okay, so Prasad is asking, he's 36 years old, and his goal is to build a retirement fund, but he's also talked about certain other aspects. I'm going to read it out for you. He's got equity holdings of about 2 lakh, and he's invested in, I believe, a money back policy of 12 lakh of LIC. And he's also invested in the SBI Child Future Plan and Post Office Girl Child Scheme. He's looking at a few mutual fund options that he hopes will give him a good corpus for his 3-year-old's education and also to have a retirement corpus of a minimum of 2 crore by the time he turns 55. So that's another 20 years away, which is quite a distance away. So Hemant, we're talking about individuals that have not necessarily bought in whole hog into the mutual fund space, despite the fact that you've seen tremendous SIPs, tremendous inflows. There are still people that have not yet gotten in and not yet seen the kind of returns that can potentially be generated. For those that have a corpus or have a SIP that they want to start right now, with perhaps your point of a little bit of froth in the market, how do they navigate it now?
Well, Alex, I believe that someone, like in this case, we're talking about a long-term horizon. Both the goals are important. The child education as well as retirement. There's a very real long-term time horizon here. My belief is that someone who's starting to invest, first thing is your focus should be in trying to understand equity as an asset class, which obviously is not something that you get to learn overnight. It takes time. So what best you can do is, one, you need to be having a clearly defined time horizon. Second is that you need to invest in a very disciplined manner. And I think that's what we are seeing. Most of the investors in India now investing through SIP. So having said that, if you were to look at the categories, I think there are 2-3 categories which I believe as a combination can work very well for a long-term investor. One is obviously a flexi-cap fund, because these are the fund where even though the fund manager has the flexibility of investing in any segment of the market, but most of these funds are actually having a bias towards a large cap. The second is large and mid cap funds where minimum 35% has to be invested in each of these segments, and the remaining 30%, again, in most of these category of funds, if you see, is invested in the large cap. The third is the multi-cap fund, where a minimum of 20%, 25% has to be invested in all the 3 segments, and the remaining usually again goes into large cap. So I think when you invest in a combination of this, it's very important. One, like I said, have a defined time horizon, invest systematically, and also to make sure that you have a representation of all the 3 market segments in your portfolio, but with a bias towards the large cap. And the second, the fund manager should have the flexibility to change the allocation. At the same time, you as an investor should also have some say in defining how much allocation you would like to do. So I think the combination of these 3 categories, I think, works out very well for someone, even if someone is starting to invest in equity funds now.
Fantastic. Harsh, last quick view. Unfortunately, we're running out of time here, but do you want to add anything to that in terms of schemes that he can look at in terms of allocation towards fixed income plus equity?
Yes, Alex. So, looking at his query, he got 2 lakhs into equity, 12 lakhs into an insurance policy, which is an investment oriented. I don't know the SBI Child investment is a mutual fund solution oriented product, or is it some ULIP or an insurance policy? The PO, the Post Office Girl Child investment that is referring to, I believe, is the Sukanya Samriddhi Yojana. Nevertheless, I have only one simple advice for him, is that you need to look at equity as an asset over long term. So he's got a girl child who's 3 years old, requires money for higher education, which at least there is 15 years time horizon, and his retirement itself is 20 years. So there has to be some thought gone into saying that we want to invest into assets which are growth oriented, which have the potential to beat inflation over a longer period of time. though there could be volatility in the short term, but you need to create wealth by beating inflation. So his allocation will need to go more towards equities now, here on. Whatever he's done till now, I'm not commenting on that part. However, here on, any additional allocation that he's making should be through an SIP into probably a flexi cap or a large mid cap or a multi cap fund, as Hemant has suggested. And it could be for long term. So he has to just have the discipline, patience, conviction, and look at investing into Indian growth, which is via mutual funds in through SIPs.
Fantastic. Thank you so much, Harsh, for giving us that view. Hemant as well, thank you so much for joining us on this program. Viewers, we have to stop, we have to slip into a very quick break, but we continue to take your queries on the other side. And in fact, there's more to talk about with regard to the small and mid-cap space of mutual funds. So do stay tuned.